Hello, good morning, everybody. How are you all doing today? It's now April the 22nd, and today we're going to talk about Bitcoin. It's about 8 in the morning right now. I'm still in sick mode right now. I'm not sure why I'm feeling under the weather. Just yesterday and today especially, it's been like feel like a flu's coming on or something like that, and it's just like my body's just got chills and stuff, and I've been sleeping a little bit more than normal. And my dog actually senses it as well. Luna's just been like, she's got that vibe around me where like, oh no, something's wrong with dad right now. So she's been extra sweet towards me. So I woke up today. I made a few trades already. I'm gonna show you guys my trade actually here. Let's just go to my Twitter really quickly. All right, so I went to my Twitter and I've made a few, or sorry, I'm gonna go to my Twitter. I worked like 37 minutes today already. I already made a combined total of about $470 in literally 37 minutes of trading. They were really easy trades today. I basically just I went long. I know it's really rare for me to actually go long, but I went long on a trade here from 7 in the morning, 7:22 to 7:30. I just saw the RSI just too oversold, so I went long on it. There's a pretty good trade there, $315 profit, and then I saw that it was leveling out the the Browns rule of RSI there, so I decided to short it, and this was a really quick 2-minute trade. I actually didn't get time to record it. By the time I was setting everything up and I finished the trade, it actually finished already, so I apologize for not being able to record it there. That was a good trade as well. It was like a literally a 2-minute trade there for a little $155 profit. So I decided I was gonna go back to bed, but I figured I may as well give a Bitcoin update really quickly since I'm up already. So let's try to get this done in a very timely manner today, hopefully under 20 minutes. So Bitcoin is back up to where it normally was, $390 billion with a 24-hour volume. That's still trending very low now. We see every coin that's it's doing pretty well right now. Every coin is actually green across the board right now, but this is very much so expected because I believe that it is the B bounce right now of the Elliott wave. So if we just take a look at the historical data right now, what we're simply seeing is that the 24-hour volume, guys, it's wonk wonk, it's very low, and this is kind of very indicative that it's possibly the B leg that's still happening right now. So we're looking at, 8.4 billion. That's where we got up to about the 9,000, 9,100 ranges right there. And then we got it got shut down pretty hard with a long wick 2 days ago. Then yesterday was of course a slow downtrend, and today is more so the B leg, but I still believe that it's actually gonna end up going down a lot more. And I'll explain to you guys why in high detail as well. So we're at $6.254 billion. Guys, don't mind my look. I'm kind of like I'm in full like sick mode right now with my hoodie and a sweater zipped up, and I really hope it doesn't get worse. Like I'm feeling these body chills already, and I kind of get like this around the hay fever season, even though that's like still allergies. But maybe it's just like we still have snow here, just so you guys know, but it's slowly melting away. Hopefully, all the snow will be gone like around May. And from April to May is a season where I usually feel very under the weather. So I apologize for my look and my demeanor. If it's rude in any way, I don't mean to be. Okay, so sorry about that. But you know what, guys? Just because I have a web camera doesn't mean that I'm gonna change. I'm going to change who I am, right? I'm always going to stay true to who I am and always do whatever makes me comfortable. So, yeah. So, let's take a look at Bitcoin now, all right? We're going to review what's going on. So, this is personally my count that I have right now, and I'm going to stick to this count until proven otherwise, all right? So, my personal count that I have right now is 1, et 2, et 3, et 4, et 5, mes amis. So that's how I see my personal fifth wave right here. And there's many ways to actually see this, all right? Now, I'm going to offer two different case scenarios. I'm going to offer, actually, I don't even know if I can offer like two different cases for this. It's extremely hard. 1, 2, 3, 4, 5. But I will try my best to offer you guys two different cases. I'm going to have to go with the bearish scenario first, okay? So this is the bearish scenario. And what we should always make good note of, guys, is actually going to the log scale on the daily chart. Make sure that you're always drawing these trend lines in here. Choose your favorite color. I'm yellow. I like yellow and white because it's the most prominent colors on black. And because I'm Asian, I naturally like yellow and I gravitate to that quite a bit. So yeah, that's how I see it right now. Hang on, I just got to cough and mute my microphone. Sorry, I was trying to like look for the button and I'm like, whoa, when I mute it, there's a big red light that comes on. This makes me look like a cyborg. Check it out. Makes me look like I'm from Van Damme's Universal Soldier, doesn't it? So anyways, yeah, so this is kind of where I expect it to still retrace to, but I expect kind of like a very, very bullish type of retracement, okay? 8,000 is like really, really pushing it right now to push that low, but unfortunately, I'm gonna have to give a very specific range here of about 8,500 to um 8,500 to possibly the 8,000 ranges again still, because we're going to use this wave 3 and 4 territory as a fairly hard resistance, right? And of course, a major, major resistance area right here would be around this region here, which is around 9,200. So this still marks a fairly hard resistance to me. And that's why we're having a lot of trouble breaking it, if you guys have noticed. Actually, I'm gonna be more specific and follow my 9,000 to 9,200 range, okay? So that's right now a very hard resistance range to me because we just simply can't break it. As you guys have noticed, we're having a lot of trouble breaking it, right? And that's very indicative that the bears right now are not in control, but they definitely have they got their stuff together, okay? So let's look at the bearish scenario right now. So the bearish scenario is that this is actually ABC. Okay, I'm going to try to keep this as short as I possibly can. Where that's A, that's B, and there's simply a C still coming down here, okay? Right? This makes entire sense, doesn't it, guys? Where this could possibly make an ABC. Because to me, this looks like a perfect type of retracement. It probably did about a 78.6 retracement or maybe a tiny bit more, right? It broke above the 78.6 region. Really normal type of retracement for Bitcoin. It's got a very strong reputation of actually hitting these types of ranges right here. So that's a hard resistance. This is a very typical B retracement for Bitcoin at the 78.6, 0.786 fib B fib retracement of B leg of ABC. So I'm just gonna get my steaming up here so I can actually do my normal shindig with you guys here. All right, I just like to do everything here in one go, so always don't mind me while I'm trying to work as diligently as I possibly can as well. And if we actually take our ABC extension, let's just say that I actually, move this to a little bit closer, right? And I'm gonna just take off some of these stuff here just to give you guys a visual. So let's say that's 78.6 right here, right? And then now the next thing that we would want to do is do a typical ABC extension with our fib extension right here, okay, just to see what range that can get to. And I'm doing it wrong. I gotta get a little bit more accurate here. A, B, and C. And what you guys still see is that, hey, ABC still simply says that we can actually get to about right here still. So, my target range is unfortunately still going to be a minimum of about 85, 8,600 range, right? My target range still stands for a correction, okay? Actually, my target range stands for, it changes every day because we get more data coming in, right? 476 to 5,000, 8,000 range, okay? So I hope that this makes sense right here, right? Where if you guys actually take a look right here, this is an ABC fib extension target. So this is ABC fib extension target 1 to 1. if this is the bearish count, right? This is the bearish scenario right there. So I just want to be very clear with you guys that this is the bearish scenario right here. So hopefully this makes a lot of sense to everybody. I'm not 100% sure if this is actually going to stand, right? But you know, we tried our best to see what it could possibly look like, and then we just evaluate from there. So if that were our ABC count right here, then you know, just going to try to make this a little bit more presentable here. Maybe I can actually put this on one screen instead of having multiple screens, which can make a lot more sense to people. This one here, I should probably get this a little bit lower in here. There we go. So this should make a lot of sense now, right guys? Yeah, I think it'll make a lot of sense. So if this was the bearish count, then what we're going to simply say is that this is exactly how it should be. Where we're getting our B retracement up there, we hit the 78.6 leg, and then we get a one-to-one extension of still roughly to the 8,576 range. So that's the bearish scenario, okay? And to support the bearish scenario, excuse me there, to support the bearish scenario, we simply just look at it over time as well, where we're starting to get bearish divergence, right? Are we getting it leveling off here, or are we actually getting bearish divergence, right? Let's take a look. To me, this is bearish divergence. I don't know about you guys, but I start to see kind of bearish divergence where, you know, it's starting to definitely come down here, and it just looks like it wants to come down a lot more, right? So if we look at it just generally over time, what we're seeing is a series of a higher low, right? We're seeing a series of a higher low. For example, this one here, even though it's higher, right? Like this one's getting a series of a higher low, etc. So I cannot help but assume that a series of higher lows will imply that we are actually bearishly diverging. Can a series, I'm just gonna rhetorically ask this in my chart. So can a series of lower highs rather, I meant lower highs, indicate bearish divergence? Or sorry, can this series indicate bearish divergence despite, okay, despite, nah, we're not going to write that last part. I was going to write despite higher high. So make sure that you guys are always annotating your graphs, right? And we simply just cannot break into the positive histogram side right here. We simply cannot break to the positive histogram side. Do you guys notice this right here? Where this right here, it actually looks like it wanted to tick upwards, right? But it just simply couldn't do it. So we gotta be rhetorically always asking ourselves, what is going on, right? So that's very important to always be asking. So here, what we see is higher high price action, but we see higher low or lower high RSI. We see higher price action, but we see lower high on the RSI ranges, on the RSIs indicated above. So I hope that this is helping as well, where I'm actually annotating it on the screen, because I believe that people learn differently, right? Some people learn just by listening. Some people actually learn as well by seeing things directly on the screen. So I'm just trying to cater to a lot of different other types of people who learn differently as well. And everybody learns differently, and that I absolutely respect and understand, especially because my dad's a teacher and he, teaches me things like this when I was younger as well. So this is the bearish. Actually, I should probably write the bearish scenario. Okay, bearish scenario on my steemit there. Okay, now we got to take a look at some candles, right? We got to take a look at the candlestick analysis now. So let's definitely take a look at that. All right. So we take a look at it on the 1 hour chart. What we're getting on the 1 hour chart is some pretty bearish candles. Okay, we're getting on the 1 hour chart this one right here, which is a massive shooting star candle, okay? Massive shooting star candle, followed by a huge bearish type of spinning top, we can call it, or almost a bearish engulfing candle, followed by bearish engulfing slash bearish spinning top candle. So these are pretty indicative, in my opinion, that there's still a bear trend that's imminent, and this could still be a possible B leg. But don't worry, guys. I'm also going to get to the bullish scenario as well, just so you guys can prepare in case something actually does happen to the bulls. Right? That's very important to distinguish, or in case the bulls do take over. So here as well, we're getting a double shooting star candle. Okay, double shooting star candle. These guys right there. Okay. I'm just gonna draw it right in here. Okay, we get double shooting star candle. 2-hour chart now. Double shooting star candle indicates heavily the bulls have lost control. And then we also see this right here as well. Okay, we see a hanging man candle. Actually, I should probably write the psychology behind this as well. Psychology. I just want you guys to understand the psychology behind these types of candles, okay? The psychology behind a shooting star candle. The bulls attempt to push up heavily, but the long wick implies that profits were taken or bears entered short positions. Hence a long wick. Okay, that's got to make sense. And then what we see here, is that next candle, this next candle is called a hanging man candle. And the psychology hanging man candle indicates that I'm sure that you guys are familiar with a lot of this as well already, right? So, but I'm going to reiterate just to make sure that's still fresh. So the psychology behind the hanging man candle is that there's a long wick that indicates profit taken or bears entering short positions. Hence the long wick, but the bulls successfully defend, though it still indicates that the bulls are losing steam. Okay, so it's very important to understand the mechanics behind candlestick analysis, and that's one of my favorite ways to analyze as well, while combining it with various methods. So what I like to do is definitely look at various methods of analysis and see, hey, what actually makes a lot more sense, right? And then another thing that we see on the 2-hour chart is that would you guys agree with me on the 2-hour chart right here that this is a higher high price action, right? Higher high price action, agreed? Okay. Higher high price action, agreed? But look at the RSI. Okay, so we take a look at the RSI. And this was very expected, guys, okay? Like for us to reach an A point first, and then to get a possibly B, right? And then, we're going to be working our way down. But if we look at the price action between these 2 points, what we're actually seeing, okay, is a lower high. But RSI indicates lower high. So that's how I'm seeing it right now. Now, it doesn't mean that I'm entirely bearish, right? It just simply means that I'm spotting more bearish divergences than I see bullish divergences. Simple as that. So yeah, that's kind of the way that I'm seeing it right now. Let's go to the 3-hour chart now, okay? 3-hour chart's nasty candle, okay? One massive shooting star candle, right? Which, you guys are starting to get it. You guys are starting to get it already why I'm seeing bearish divergences, right? We're getting a shooting star and we're getting a huge hanging man candle here in a 4-hour. Hanging man candle in a 4-hour is very, very deadly. um, yeah, I'm gonna flip this around. Just gonna annotate it for you guys as well, okay? So 4-hour candle, deadly hanging man. Scary for bulls. This candle should be scary for the bulls. Honestly, it should be very scary when you look at it like that, right? So I'm just gonna copy and paste this. So then now we look at the daily chart, and what we're seeing on the daily chart is a combination of a doji candle. Two doji candles are forming. Daily candle for the past 2 days, we see 2 doji candles. These are not inside candles forming. If they were inside candles, it would indicate a possible big break up. These are not inside candles. They're more so doji candles that are getting very, very break up, but instead these doji candles at the top of a large uptrend usually indicate profits can be taken soon. So I hope that this makes sense, okay? What I'm writing. I kind of like this new style of analysis where I'm annotating as I'm going because there's lots of information to be told, right? And I'm also copying and pasting everything so you guys can go to my Steemit. Like as I'm doing this, guys, I'm actually copying and pasting it, these charts, right? And I'm writing it all over here. So you guys can actually all go over this again as well. So it's kind of a cool way of doing it. I'm digging this new style. Okay, now let's go over the bullish scenario, okay? Because I know you guys are definitely interested in hearing the bullish scenario as well. So now let's go to the bullish scenario where I'm going to end up calling this wave 1, 2, 3, 4, and there's still a 5th wave, okay? And there's still a 5th wave because I only count 1, 2, and I possibly see this as 3, 4, hold on. 1, 2, 1, 2. I don't even know if I can possibly count this as a 3rd wave. Okay, let's just try our best to give you guys a bullish scenario as well. 1, 2, 3, 4, and possibly a 5th wave somewhere up there still. If that's even possible, like, you know what I mean? So yeah, I'm going to try to give you guys a bullish scenario. It's hard for me to come up with one right now, but I'm going to try my best. Because you guys got to make note of these heavy resistance areas. I mean, that's nasty, this resistance area. Oof. So I'm trying my best to come up to be objective here and actually come up with multiple scenarios. But yeah, I'm having a hard time, guys, like, coming up with this scenario here for you guys. I'm gonna have to go with something like 9,300 at the most, 92-ish. Like right there, right around there, okay? And the reason why this could possibly be a bullish scenario is because if this was only the 3rd subwave right here, okay, and that's the 4th one, then we clearly still have a 5th one to be made here, right? That makes entire sense. And also this could be seen as a ascending triangle, right? If we see it that way, depending on how we look at the wick, right? So I'm going to indulge you guys here and say, could this be seen as an ascending triangle, right? Can it? You guys tell me if it could actually be seen as an ascending triangle. I see it possibly as an ascending triangle, but you know what? The risk to reward ratio is so crappy that it's almost not even worth my time to play it, right? It's not, to be quite honest, right? So I'm just going to zoom out here and say, can this be seen as an ascending triangle right there, where there's a fractal, and then we get one more push up to 93, 9400 range. So the target is 9,200 to 9,300 range. One more wave up. Hard, right? Hard for me to offer this perspective as well right now. But you know, I'm gonna be very objective for you guys. Could this be seen as an ascending triangle? Let's rhetorically ask this as well right now. Bullish scenario, the ascending triangle. Just like that, right? The ascending triangle, just like that. This could be seen it depending on how the wicks are taken, I suppose. But at the same time, it's like it might be grasping on straws, right? You know, um, the ascending triangle. Yeah, you know what? I'll zoom in. I'll zoom in so you guys can actually get a very good look at this. Let me just copy this very quickly, put it on my Steemit. Where's my Steemit? The bullish. Okay, so let's zoom in very close now and take a look at it from here. All right, so where would the break be? Where would the break be? Well, keep an eye on a break above, like we're going to look at on different time frames, right? Because different time frames will show different wicks. So let's first of all indicate a region. Keep an eye on a break above. Okay, keep an eye on a break above around, you know, one of these ranges, like 89.50-ish, right? So keep an eye on a break above, on a break above 8,950. Though the clear break will be when it breaks this one right there, 90.69. The clear rally to 9,200 to 9,300 range would be when we break the interim swing high of 9,067. Swing high was right here. Okay. This is the swing high. Swing high just basically means the previous swing high. There we go. So this is more, this should make a lot more sense now, right guys? Right here. So this is the bullish count right here. There we go. Now I'm offering both counts, right? And that's what we do as a trader, guys. We try to evaluate it from many different perspectives, right? And then we try to see how we can accommodate for unforeseen circumstances. And then we try to see if the risk to reward ratio is worth it for us. Now, I don't know about you guys, but to me, that risk to reward is kind of like, whoa, geez, it's kind of like really not worth it, you know? Because if you think of a break, where do you enter? Do you enter where the wicks are, right? Do you enter where the wicks are? Like, let's say you entered right there for a really crappy possible, like 4% gain, you know? I see it as pretty crappy risk. It's okay risk to reward in terms of ratio wise, but in terms of percentage gain, it's almost like, no, I just want to stay on the sidelines and just kind of chill and wait right now because it's not really worth it in my perspective, right? So I'm not really the biggest fan of this scenario right now, okay? So, like a break, and just generally speaking, okay, generally speaking, bullish count is validated by a break above 9,067, okay, to the target range of 9,200 to 9,300 range. And a bearish count is validated by a break by two things, by two criteria. One, a break outside this triangle. By two criteria that must be met. A break outside this triangle. Two, a break below this previous low right here of 86.16. 86.16. There are some possible plays, though the most profitable is a correction where we accumulate, right? The break above 89.50 89.52. So where was I? Sorry, I actually have my folks here now, so I got to get going right away. The break above 89.50 should be noted. Okay, though a clear break above, same thing as above, basically, that I'm writing there. Keep an eye out above right there. Above 9,067 indicates the rally to 9,200 to 9,300 range, okay? Though I see this as a decent RR setup, the percentage gain is fairly small. Also, we risk failure, therefore confirm it's not a bull trap, right? That's the last thing you want to do, is be bull trapped up there, right? So there are some possibilities. I meant to say, so there are some possible plays, right? Though the most profitable is a correction where we accumulate. The break above 89.50 should be noted, though a clear break above the 90.67 indicates the rally to 9,200 to 9,300. Though I see this is a decent RR setup in terms of percentage. We got to keep that in mind, right? Or in terms of ratio, right? The percentage gain is fairly small. Also, we risk failure, therefore confirm it. So just to give you guys an idea of the possible setup for the bulls, okay, guys? So for the bulls, if we break above, I don't know where you guys are going to be thinking of answering, but I'm probably going to let's say accumulate somewhere there where we get an average, right? Where we say 25% of our position 25% of our position is bought here, just so we don't risk that much, right? Example, 25% of position bought on breakout of 80.50 first of all, okay? Or 89.50, right? Just to give you guys a very general example, right? And then after that, okay, right around here, okay? So I hope this makes sense. Get a little bit very clear for you guys, right? Right here, okay? And then, for example, here, and then the rest of your position is bought upon the breakout. The rest of the position, or add more to position upon breakout above 9067, right? This way we minimize our risk as well and our exposure in the market. So that's one possible play, okay? So this way we get an average price, right? We get like an average price of something still fairly decently low, which will allow us to get our risk to reward ratio where we target around 9,200. And then we set our stop loss for, say, 8,900 or something like that. Just very, very, very tight stop loss, right? So this is one example that could be made, which is a decent RR ratio, I suppose, of about, 2 point something percent. This is a very, very small gain, but, I'm offering all different sides for both the bulls and the bears right now as well, right? But of course, the bearish scenario is obviously a lot more favorable in my personal opinion, because if we actually end up retracing, well, the RR setup is going to be huge, where we can dollar cost average as best as we possibly can. So anyways, I just want to give you guys a very quick update in the morning. I'm definitely going to go call it a night again still, and I'm going to go back to bed, and I'll try to give you guys an update later throughout the day. So I definitely covered both bull and bear scenario. I've got no idea which way it's going to play, guys, right? If we have one more subwave up, or if this is actually the ABC correction, where this is A, that's B, and we still got a C coming down. So there's one of two things that can possibly happen. So other than that, guys, I really appreciate all the love and the support that you guys have given me. I will definitely have a very detailed Steemit post here where you guys are welcome to take a look at it, where I have a lot of different charts here for you to evaluate. Please make sure you head there and just support me a little bit by clicking on the upvote button. Other than that, have yourselves a great day, guys, and thank you very much for watching this video. Bye, and good morning, and good night. Sometimes I wake up just so I can take a nap. Bye now. See you.